The global financial system has a secret that they spend millions of dollars trying to keep away from you: the institutional elite, the big banks, and the multi-millionaire corporate entities want you to believe one massive, devastating lie. They want you to believe that the only way to build wealth is by working hard, grinding for decades, saving every single dollar in a standard bank account, and avoiding debt at all costs. But while they preach this narrative to the masses, they are playing a completely different game behind closed doors. They don't want you to know that in the modern economy, raw cash is a melting ice cube, destroyed every single day by the invisible tax of inflation. And more importantly, they hide the ultimate truth. The world's wealthiest individuals do not build empires using their own money. They build them using other people's money. They build them using strategic, mathematically engineered leverage. They build them through the mastery of credit. Welcome back to The Market Veteran. Today, we are stripping away the propaganda and pulling back the curtain on the credit score trap. We're going to expose exactly why the educational system intentionally conceals how the banking algorithm works, the critical difference between the debt that enslaves you and the debt that frees you, and a precise framework to hack your credit profile so you can stop playing the game as a victim and start operating like an institutional insider. If you are ready to reclaim your financial sovereignty, listen closely to every word of this analysis. Let's begin with a fundamental question that mainstream financial advisors never want to answer honestly. Why did the educational system teach you how to memorize historical dates and solve abstract equations, but completely refuse to teach you how the FICO scoring system works? Why did they leave you completely uneducated on how to manage a credit profile? It is not an accident. It is a feature of the system, not a bug. The institutional elite need a constant, predictable stream of uneducated consumers. They need people who receive their first credit card, treat it like free money, maximize the balance on low-value consumer goods, and then spend the next 20 years paying 29% compound interest back to the banking cartel. The system does not want you to understand credit, because an uneducated borrower is the most profitable asset a bank can ever own. You are their exit liquidity. Your interest payments fund their luxury office buildings in New York and London. To break out of this trap, you must first understand that the system calculates your entire economic trustworthiness based on a 3-digit number known as your FICO score. This number is controlled by 3 massive, private, unregulated credit bureaus: Equifax, Experian, and TransUnion. They have built an automated algorithm that judges your financial risk. And the greatest irony of this algorithm is that it does not measure how much money you have. You could have $1 million in cash sitting in a checking account, but if you have zero history of managing debt, the algorithm will label you as high risk and give you a terrible score. The credit score is not a measurement of wealth. It is a measurement of how well you obey the banking system's rules. Once you realize this, you stop viewing credit as an emotional burden, and you start viewing it as a game with specific, exploitable rules. Let's deconstruct the exact mathematics of the FICO algorithm so you can understand how to optimize it. Your credit profile is broken down into 5 distinct mathematical pillars. The first pillar, accounting for 35% of your total score, is your payment history. This is the absolute foundation. The algorithm wants to see flawless, uninterrupted consistency. A single payment that is reported 30 days late can instantly destroy over 100 points from an elite score. Why? Because the system is looking for cracks. In your psychological discipline, institutional money never misses a date. To beat them, you must automate every single minimum payment to ensure your history remains mathematically perfect. The second pillar, which commands 30% of your score, is your credit utilization ratio. This is where 90% of retail consumers destroy their financial potential. Credit utilization measures how much debt you are carrying compared to your total available credit limits. For example, if you have a credit card with a $1,000 limit and you carry a balance of $900, your utilization is 90%. To the algorithm, you look desperate. You look like you are drowning. Even if you pay the bill in full every month, if the bureau captures the snapshot while your balance is high, your score will plummet. The wealthy elite keep their utilization under 10%, and often under 2%. They do not do this by spending less money. They do this by forcing the banks to increase their total available credit limits into the tens of thousands of dollars. If you have $50,000 in available credit, A $500 balance is statistically invisible to the algorithm. Your score skyrockets because you look entirely. The remaining 35% of the algorithm is split between the length of your credit history, the types of credit you utilize, and new credit inquiries. The system values longevity. It wants to see accounts that have been open for 5, 10, or 15 years because time proves resilience. This is why you must never close your oldest credit cards. Even if you do not use them, closing an old account artificially shrinks the average age of your profile, instantly signaling instability to the algorithmic scanners. Now that you know the rules of the algorithm, you must understand the psychological shift required to execute the ultimate strategy. You must learn the dividing line between bad debt and strategic debt. Bad debt is any liability that you secure to purchase a depreciating consumer asset. When you use credit to buy clothes, electronics, luxury vacations, or vehicles that lose value the moment you drive them off the lot, you are committing financial self-sabotage. You are using high-interest leverage to fund lifestyle inflation, ensuring that your future labor is entirely owned by the financial institution that lent you the capital. This is the trap that keeps the working class trapped in a perpetual cycle of living paycheck to paycheck. Strategic debt, however, is the exact tool used by real estate syndicates, hedge funds, and corporate billionaires. Strategic debt is low-interest leverage utilized to acquire cash-flowing, appreciating assets. When an institutional investor secures millions of dollars from a bank, they do not use it to consume. They use it to purchase residential real estate complexes, infrastructure assets, or businesses that generate consistent monthly revenue. If the asset generates a 12% return and the bank lent them the capital at 5%, the investor pockets a clean 7% spread on money that wasn't even theirs to begin with. That is how real multi-generational wealth is manufactured. They do not save their way to $1 million. They leverage their way. They're using an elite credit profile as their passport. Your mandate starting today is to stop looking at credit cards as extension lines for your personal income. Treat your credit profile as a corporate entity. Your goal is to build an unshakable financial foundation. Scale your score into the premium 750+ tier and use that elite standing to access immense pools of institutional capital. When you possess an elite credit score, banks will actively compete for your business. They will offer you massive lines of credit, eliminate predatory fees, and grant you access to 0% interest introductory windows. That 0% institutional money can then be legally and strategically deployed into purchasing your first real estate asset, funding a cash-flowing venture, or protecting your liquidity during market downturns. The system is designed to reward the analytical and punish the emotional. The mainstream media will continue to tell you to live in fear of debt because they want to make sure you never learn how to control it. They want you dependent on your salary, dependent on the system, and unable to move when opportunity strikes. Educate yourself. Build your profile. Master the utilization metrics. Stop letting the banks profit off your ignorance and start forcing them to fund your freedom. If you want to continue looking past the mainstream economic noise, deconstruct the hidden mechanisms of big money, and master the rules of global financial engineering. You cannot afford to miss our upcoming structural breakdowns. Hit that subscribe button right now, turn on notifications, and join our elite circle here at The Market Veteran. Train your mind to play the game like an institution. Thank you for listening. And until next time, stay defensive.